Yes, first of all, I would like really to thank Professor Becchetti for having organized these sessions and the next roundtable. So I'm really grateful to Leonardo, who coordinated all the speakers, invited them, got in contact with them. So he did a really great job for that. So I really wish to thank you. Thank you, Leonardo.
Thank you, Tommaso. And I'm Leonardo Becchetti. I'm a professor of economics and advisor at the national and international level of environmental sustainability. I think this is a very important session because you want to see what is the nexus between our ideas, our theories, and what is going to happen in the field. Just to make a 4 minutes introduction, we are at the eve of the revolution of economics, but we don't know whether we are too late. We have to run, okay? So what is this revolution that they embody, as you will listen? The revolution is made of 4 steps, what we call civil economics in Italy. First, going beyond, with respect to the standard, the paradigm, neoclassical paradigm. First, going beyond anthropological reductionism, okay? The human beings are not homo economicus, are not hominis economici. We know from behavioral economics. They have a lot of other regarding preferences. And this is good because, as Amartya Sen says, they are not social idiots. You know, Amartya Sen says this because the homo economicus is unable to solve a social dilemma. Is unable to do 1 + 1 = 3, what they say. Is unable to cooperate in social dilemma, which is the standard of our life. So that's first point. Second point, beyond corporate reductionism. That is exactly what they are. What does it mean? Not a company which maximizes profits no matter how, without taking care of environmental externalities or social externality, but a new generation of entrepreneurs who are more ambitious, I say, because they want to put together profits and impact and generativity of their actions, okay? And this takes the form of several kind of new companies. We know about all the new cooperatives. With them, we will listen about ethical banking, ethical investment funds, okay? So this exists and it works. Third, indicators. That's very important because when we put in our navigator, the key action is where we want to go, okay? So where we want to go, not, let's say, GDP is not a sufficient measure of well-being and sustainable well-being. So a new generation of indicators based on what I call generativity. What is generativity? Combination of creativity and having impact, okay? And we have a lot of papers on that side. Fourth, it's so this means that we need a change of indicators as well, hybrid indicators. We are going to make a festival in Italy where we will present the ranking of regions and countries based on hybrid indicators. How much you create value for unit of emission, carbon emissions, or for unit of PM10, PM2.5, okay? So that's hybrid indicators. Fourth and last, a new political economy of which they are part, which is not a two-hand political economy, which is basically the mainstream idea is a market failure, then the benevolent planner solves the problem, okay? But we don't have benevolent planner that know everything, that they want to do the interest of people, provided that they know what it is. So we need four end. We need the market, we need institutions, but we need active citizenship, individuals who vote with the wallets, who do sustainable consumption. That's the basic of their work. And a responsible business who cooperate to social and environmental goals. So that's basically what is the new paradigm where we are going, and we have to do quick, okay? So the goal of this session is to listen from those who have been part of this change. What is this change, especially on the side of responsible business? So what is responsible business in finance? And I would ask them to work on three levels. First level is also their biography, what they have to do with this, okay? Because life is made of personal experiences, what they have to do with this change. Second is what we have done so far, because this is not fanciful thinking, this is not wishful thinking, it's something that is occurring. is working. I always tell to Ugo that 20 years ago at Banca Etica, we started a responsible investment, so we were the pioneer, and today almost everyone pretend to do responsible investing. So the third point is, what is the challenge today? Okay, what are the challenges today? Problems are getting worse. Okay, and so the issue is whether our sensitivity is going enough. The speed is good enough, okay, to produce the change. So first of all, after this introductory frame, I give the floor to Adriana Kokornik-Mina, which has a very important story in this world. Is a research and senior manager at the Global Alliance for Banking on Value. She will tell us what it is, but basically is the association of all banks in the world that want to do responsible banking. They want to do something different, okay? So value-based banks to make through this revolution of generativity. So they want to be generative, they want to change things. He has done a lot of other things, and he worked at the university before, London School of Economics, and of course, he has activities at several institutional levels, as we all have. So I will ask the speaker to keep into, let's say, 15 minutes, because so we can have floor for a second round from them, and also for questions from the floor. We are very much interested, since you are such a representative, group of minds and hearts. So we want to have feedbacks from you. So I give the floor to Adriana.
Thank you very much. For a moment, I sat there and I thought, I'm getting the questions for the exam right at the time that I'm supposed to take the exam. Okay, now you've introduced me, so I think I get that right. And then the other two questions were, what do we have done so far, and what are the challenges today? So it is a real pleasure to be here. Thank you for the invitation, and thank you for the organizers who have made it possible for me to attend. I would like to introduce first the Global Alliance for Banking on Values. It is a movement, and it was established in 2009. Ugo Vigeri is one of the founders of that movement, and so you can ask him all about it. But for me, as I joined it much later, I can just generally give you what our mission and our vision are. We really come together to exchange best practices, to strengthen amongst each other what works in this world in the area of banking. And we are 69 members now all over the world. And our vision is that finance serves people and planet. Each and every one of these institutions are responding to specific needs in the markets in which they operate. But each and every one of those institutions know they have opportunities to learn. And that's what brings them together. And we think that we also have an opportunity to inform the change of the system. You see, we are relatively small. Together, we manage assets of about 200 billion, so relatively small number of organizations. It's a global reach, but not only are we very diverse geographically, but also in terms of business model. So there are microfinance institutions, credit unions and cooperatives, commercial banks all over the world, from Democratic Republic of the Congo all the way to Mongolia, Canada, Italy, and Latin America, various countries, and in Australia as well. What brings us all together? And this was effort done early on in the lives of the GABB. These are the principles of values-based banking. And why values? Because what these banks stand for is that vision of the future they want to create. What vision of the future they want to create maybe is a vision of a future that's inclusive, one that's sustainable, that one is fair, just, where people are empowered socially, etc. So these principles capture that diversity of business models with that intention or purpose that drives the decisions that these institutions make. And they start with the idea of triple bottom line. And I know for many of you that the use of this term might immediately create a question mark, because even the person who promoted the term has said this does not exist. Nevertheless, moving on beyond the choice of words, think about advancing social empowerment, environmental regeneration, and economic prosperity, and making every decision, financing decision, driven to meet those objectives. You are these organizations are very clear that you need to operate in the real economy. You have to be centered on your clients because you are here to meet their needs. And therefore, you need to understand what those needs are and meet those needs. Their focus is for the long term. It's not about making a quick return. So they're resilient to outside disruptions, connected also with their presence in the real economy. So all these principles are integrated, and they're transparent and accountable, because after all, this money is other people's money. It's not their money. So they need to be transparent and accountable. It's not a black box. And these values, these principles are embedded in the culture of the organization. And I don't want to portray here that everybody is perfect or that all 69 institutions that are a member of the JBB practice these principles in the same way. Nevertheless, one of the reasons the JBB exists is precisely to embed those practices and deepen those practices further. And some of our activities are geared precisely towards that. So for some of you who are not particularly familiar, it's very helpful to visualize what does this look like in practice. If I were to look at capital intermediation as a core activity that banks execute, we could think of it as actually being able to fit in across these 8 dimensions. And values-based banks really try to operate in this bigger box at the front. Basically, most of the intermediation happens on balance sheet, most of it in the real economy, and most of it is designed to or aim to be triple bottom line. This is important, and it's a very important difference. When we look at them in the context of the global systemically important banks, GSIBs, there's a very significant difference in the share of loans to total assets. These are very simple descriptive statistics. These are not intended to do very much more than to just say, if we were to compare the values-based banks against the GSIBs, how would they look like? And there's a few things I want to highlight here. The first one is the ratio of loans to total assets, which we use as a proxy for their exposure to the real economy. And we see that for values-based banks, it's about 68%. And for GSIBs has oscillated around 40%. What else are they doing with the remaining assets that they are managing? Whereas in this case, you see the GABB banks very present in the real economy. Then the return on assets and return on equity, it is not that different. If there is a claim that being active in the real economy is not good business, these numbers show that that is not true. And also you see, in the case of the return on assets, the exposure to the real economy is very clear and evident during the COVID period. Nevertheless, numbers for 2021 that are coming in suggest there is going to be a big return for a number of reasons, including excess liquidity in the system. I wanted to now move on to my second task, which is a little bit the challenges. And I would argue that values-based banks, while this donut economics model is relatively recent, these organizations for a long time understood that they needed to operate within, it's not, it's moving. I promise that I left my hand. It's moving alone. Anyway, that this is a very helpful descriptive of where we need to be operating. So the values-based banks are going to be trying to meet the basic needs of food, of providing jobs, of creating social equity and inclusion, gender equality. Those are the values that they are pursuing, but they also have some challenges. Some of them are linked to the fact that they're relatively small. So we may have an institution like Cultura who has 20 co-workers and manages around 130 million in assets. I mean, it's really, really little. Or we may have Untitled Credit Union in Western Canada that has about 1,000 plus co-workers, to about 2,000, and manages about 23 billion in assets under management. So in that case, you see that the spread and the distribution of size of our membership is very different. And so the challenges they face, some of them are common and some of them are more specific to some. So I never want to portray to you that this is a homogeneous and an all representative description of challenges. But some of it does matter for its regulatory demands. These are very significant. And it's not just about the question of responding to regulatory demands. Some of our members find that, in particular sustainable finance regulation, that some of this is not serving this more holistic model that they practice. And therefore, it is important that values-based banks provide a reality check of what actually constitutes sustainable and impactful banking. Attracting new capital, when you have exposures, particularly for the small organizations, very connected to the performance of interest rates, if they are not having a lot of activity during the COVID period, but also with low interest rates, they may have a difficulty of sharing dividends with their investors or of attracting new investors. So you really need to have committed investors to come into these organizations to be connected to the mission and push that further. The transition to a low carbon future is also a challenge. And I will go into more detail on what that looks like for some of our members. And digitalization, again, it's something that particularly the large microfinance institutions in Latin America are pushing forward very effectively, developing new apps so that allows that for reaching out very much directly to the clients, but also internally, what does that mean? What do you actually create a system for, and what do you continue to do manually? And then in terms of the size and cost dynamics, which you would see reflected in some of these challenges. But nevertheless, what I want to highlight is the intention to always operate within this planetary ceiling and social floor, and to advance and raise the performance. So what are the responses? Let me just group them very generally along 3 categories: the establishing or development of partners, the changing and informing of policy, and the evolving of the organization and the products or services that they provide. And by establishing development partners, I would actually argue that these are social innovations. And these are not just recent social innovations. They really respond to, if you are a very small organization, you are committed to serving those underbanked or underserved in your market, and you need to provide collateral. What can you do to solve this problem? And then you establish, in this case of our partner in Sweden, Ecobanken, Microfond in Sweden, which actually provides that collateral as required for them to be able to serve that. It's about thinking, what do you need in order to solve the challenge and meet the needs of those individuals that you recognize are not being served. You also may want to go outside of your own development of partners and find another institution with whom you can connect. And therefore, in the case of Triodos Bank Inclusive, being a very large European bank for purposes of the GABB, they partner with credits that allows them to provide loans to institutions, to members who are much smaller, SMEs who are much smaller in terms of loan value. Changing and informing policy, that is very critical, and is only going to get bigger. And this is only going to get bigger because many of these institutions are leading in this, if we call it, net zero journey. And that requires engaging in the space of policy, but also to serve clients. So one of our members, Clear Water in Montana, they have engaged with state government to bring in programs that in this instance helps to actually longer terms and high security of loans, which basically translates into lower interest rates. And in the case of Untitled, developing retrofit labels. What does it mean to have a retrofit building? What does that look like? How are we going to make sure that everybody understands what is required? And they engage also to encourage the government, the provincial government, to really provide solutions to gas and transportation. Because after all, when an institution like Pan City sets a net zero target, they cannot just do it alone. They have to work with the local actors in order to translate and transform the electricity supply, the electricity mix, or the transportation fleet, et cetera, et cetera. And then we go into evolving the organization. And that's another feature that I really recognize amongst GABB members, which is this pursuit of evolution of the organization. When you are finding now that in the space of transition to a low carbon future, you need new board competencies, you need new processes, you perhaps even need to adapt your own systems to more accurately reflect the ambitions that you have set for it, and you must engage with your clients. The range of new products, and I have really had a good conversation with Hugo some weeks ago, and it's about not products, it's about it's about this holistic version of. So let me now very quickly move on to the types of activities that our members are doing. This is an example of using information of financed emissions, translating it into what type of business you would finance and whether that business would or not meet the 1.5 future temperature increase that you would expect. This is the ultimate model of organizational change that is being currently put into place in the LS Bank. You can see on the left-hand side 6 areas that are the core sectors in which the bank is active. They've identified drivers of transformation, translated them into questions of regulation, technical, scientific, economic, and social political, and developed an array of responses, including offering members or clients in this case, the CO2 calculator, where they show the client what the carbon footprint is and encourage them to take ownership of that and work with it. In terms of accountability and transparency, and here is where you also see some elements of JBB coming in, the triple bottom line, classification of portfolios and target setting, how much of your intermediation you want it to be triple bottom line. This is from Van City, and you're using of additional tools to understand what is the impact areas of your organization, and then what do you do in order to respond. They have set up a prosperity fund, 30% of the profits go into this fund. They use that as collateral for some of the lending. And this is an example of NMB Bank in Nepal. This project would not have happened unless this blended finance structure was in place. And the reason is it's very high capital expenditure, plus there was high risk. Nevertheless, all these actors were part of it. And the reason NMB Bank was a chosen partner, not only because they managed the actual Alternative Energy Promotion Center Fund that is part of this structure, but also because of the record and the understanding of how the forces work. So what is it that these banks are doing? They're constantly playing in this sort of realm of defining what it is that they want to accomplish, designing whether it's going to be directly or indirectly through financing of SMEs, implementing different products, processes, monitoring, but as proof points. It's not the objective to monitor. You have this as a proof point that you are on track to meet those objectives, the vision that you have set up, and then scaling up. But still we have problems, and we have these challenges that we want to solve, and these banks are solving some of these issues. We shouldn't forget that these banks are operating in this context. So where do I see the JBB? The JBB is in this realm. If we were to visualize how the market is evolving to a greater level of sustainability, I would position the JBB in this space of pre-competitive collaboration, pushing for the institutions to come in and to really make these practices that have been shown to be in fact impactful part of the everyday requirement of activities of banks. There's a lot of activity in the sustainable finance space, very confusing, but let's just recognize that what needs to be happening is the market needs to be progressively moving towards higher levels of sustainable. Yeah. Now, lastly, we still have those feedback loops, some of these leading to unsustainable outcomes, and we cannot alone as institutions change them. But nevertheless, I can assure you that each and every member of the JBB is very aware of those unsustainable loops and are trying in a variety of ways to change those dynamics. The dynamics need to change beyond these institutions, and this is why I'm really encouraging all of you to think together with us. The JBB members are financing change, but they're also looking to change finance. We do some step change through, say, for example, to globalizing the initiative to measure financed emissions, known as PCAF. We were very instrumental in the growth of that institution and the globalization. And then the incremental change, which happens at, for example, some efforts that we've done to inform what shape would the social taxonomy take. Member contributions continue to operate with this step change and incremental change. However, there's much more to do, and we need to accelerate our efforts. I look forward to your assistance, to your wisdom and your recommendations, and working with you. Thank you.
Adriana, thanks a lot. And before giving the floor to Ugo, just one consideration, which is also a question to the floor, no? I wonder, why don't we vote massively with our wallet for responsible consumption and production if it is our interest to do so? That's a mystery to me. We have all the instruments, and now we are in an era even of institutionalization. Even the institutions are asking to do this in some way. Why we don't do it? My money is in Banca Etica, and I have the same return of another bank. My investment funds have the same return of the other investment funds. So I really do not understand. I think it has something to do with the idea of the invisible hand. We think that the invisible hand is putting everything right. It is not true. The life is, economic system is not made by invisible hands. It's made by bicycle, and we have to ride this bicycle. So that's my consideration. So I ask you, then you will answer to me, why we don't vote with the wallet. Let's ask to Ugo now. Also because when you vote with the wallet, you have a double advantage. You still have the same return, but you have the advantage of feeling that the money, your money, is doing something generative, something useful, no? And that's what, share life, my life and life of Ugo. Ugo, first of all, Ugo is not Anna Fasano. And Anna apologizes because she got a small accident, nothing bad, but she couldn't come. But Ugo is a very important person in the history of Banca Etica because he's the former president. Now he's the president of the investment fund company of Banca Etica. He's a good friend, and in these years I was just president of the ethical committee, and he did their job, the job of doing the bank. So I'm really grateful, first of all, for what he did for the bank, and she can share with us his experience and again challenges and situation. Thank you, Ugo. I'll give you the floor.
Yeah, thank you very much. Thank you, everybody. So I will just try to explain a little bit of the things that we do as Banca Etica Group. Adriana give you the general framework where the banks, who since in some cases 40 years are working with the strategic objectives that are not just financial but are also environmental and social. How do they develop in a very empirical way methodologies and process in order to take in account these strategic environmental and social goals. Just few words about Banca Etica Group. We manage roughly 10 billions of euro, which is not so much. It's little in comparison with the banking system, and but we think it is quite significant because together with the other GABV banks, we demonstrate that if you take care about environmental and social issues, you can do banking in a system which is not thought for helping the banks who want to take care about environmental and social aspects. So most part of the banks, it's clear they just look at the advantages they have for their shareholders, and so they don't really care about the social and environmental impact. We see even right now, after the 2015 Paris Declaration, they finance more oil extraction and not less, as it was thought. So it's for sure we need a cultural change that brings to new rules, to new political or rules for the banking system in order to change the way the banks work. Because otherwise, if we wait that they do it voluntary, I think will never happen, or it will happen too late. Okay, so in some sense, I just give you a provocative talk. We have learned in this last 2 years that for COVID, for the pandemic, and then now for Ukraine, we all together, the big part of the world, put some new rules and some new investments, some change of the paradigm very, very fast, because we have to react to what it was the pandemic. And now even because we want to sanction Russia for the invasion of Ukraine. The environmental challenges are not less dangerous than what was happened with the pandemic or with the war in Ukraine, and they will not bring to less disaster from the point of view of a social or clearly environment. But we are not in the mindset to put with the same urgency some change in our regulatory structure. So it seems impossible that we force investment not to go in the direction of the destruction of our world. But we have really to take a comparison with what we have done we are doing with the pandemic and Ukraine crisis. So it's just the time scale is not helping us, because you see slowly we are like the frog who is boiling in his water. No? So it's it's a problem that we have to face with more urgency. Well, first of all, not just environmental, also the social. The social issues are. We cannot have a transition without a just transition. So we need to carry on together both the environmental and social aspect. And well, Banca Etica was born 23 years ago. 20 years ago was born the Ethical Investment Fund Company, which is Etica SGR, where I'm now chairman of the board. And all the idea was, and this is already Adriana underlined, the idea of an holistic approach, not just a single product, well done, a sustainable product, but having the right questions in every kind of activities that you do. So are your partner, your commercial partner fit and proper from an ESG, environmental, social and governance point of view? It doesn't matter if you don't sell their product directly, but you work with them. So all the organization of the bank has to be thought and to have a confrontation with this kind of aspect. So at the end of the day, what we develop, and it's common to many other banks, is that we have the ethical choices that are embedded in the general management of the bank and in its control system. This is really important, because otherwise you have declaration and then you not even are able to show or to demonstrate or to manage if you respect your declaration. So your control system, your audit, your compliance have to check if your declaration are achieved or not. This is very important. So it's not just about what we will, a vision, but how do you manage, which kind of tool or process you use to manage this change. So one thing, as an example, is how to measure. We need measure. We need to measure what we do, and we have. I present just one tool. I have not so many slides. I'm sorry, but just I want to present this tool. We decide to have and it comes. It's a learning by doing. So it's not that from the first day that we do this. This tool has been put at work since 2019, so 3 years ago. Okay, but we measure some indicators, and we have our impact report on these indicators, and this is has two purposes. Here you can see what we have achieved in last year. This is the figures about 2021. So Banca Etica mainly is due to the 1.2 billion euro that we disburse as loans. Okay, so these figures are the portfolio loans of the whole portfolio loans, not the 4, 5, or 10% part of the portfolio which is of sustainable products. And so, for instance, there is 82,000 tons of carbon dioxide that has been avoided with this loan. And we manage, or 15,700 hectares of organic agriculture that has been cultivated with our loans, or 40 new renewable plants for energy that produce 128 megawatt. They're not so big numbers, I mean, but it's what we can do with the relatively little portfolio that we have. Other numbers, I was looking more at the environmental, but there are, for instance, which is not bad, during COVID in 2019, we create, thanks to the loan, almost 6,000 new workplace, which is quite an astonishing number, because it means that we measure that with the theory of change. So it means that it's really what happened thanks to the loans, not the people who are working in the in the organization we finance. It's really the loan what brings more, no? So this is the idea we calculate this. And we are growing with the other number, the last one, 27.8% are the green loans that we are disbursing. So Banca Etica was born much more focused on social issues, but so now it's growing more and more the loans that we can define also green. We think all our loans are social, but the green side has to be increased. So, or migrant, 4,300 migrants that have been hosted thanks to the loans of Banca Etica. So, what is the idea? But this is not just reporting. So, let know the customers of the shareholders what we do. It's also a tool. Behind these impact figures, there is a tool, and we have called it impact appetite framework. And I should say just a little bit thing. I was there with Anna in the board when we decided to do these things. It was because the regulator called the banks to do a lot of stuff in controlling how they work, and one was the risk appetite framework. And we were saying, okay, we have to organize and to manage the bank all with total concern on risk appetite framework. For those of you who don't know what it is, it's a set of indicators. For instance, you need capital to do a bank. So is your capital enough? How much capital you want more? How much loans you want to do in comparison with the capital you have? And which is your cost income? This kind of numbers. And for every indicator, you have to set up where you want to go. If you want to be stable, go lower. And what happened if not? So there is a level of tolerance. It means, okay, it doesn't matter. A level of warning. And so it means that somebody, maybe the general manager, or if it is complicated, the board of directors has to take in charge the fact that you are at the level of warning, and there is a level of alert. Means the board have to talk about this. Okay, so we do the same exactly the same things about impact issues, and so we have 5 area: environment, rights, governance, international peace and justice, and ethical finance promotion, where we have the goals, and we want to see if they remain stable, if we have appetite to go higher or not. And it's a really interesting tool because it's changing the way that also the bank is working, because at the end of the day, when you do your budget, you don't have just to look, which is not just, it's very important, to look to the capital requirement or to whatever the regulator asks you, because it's a good thing that they ask you this kind of thing. But you don't have to forget your strategic objectives. And so you have another driving force, which is, okay, but I want to finance to host more migrants. At the end of the year, you have to do that or not, and you are forced to measure. There are the environmental indicator are the one that you see here. So I think this means fixing target politically in the board of director and manage the bank in order to reach this kind of target. Let's two things more, and then I stop. We try also to have then some special product. I totally agree with Adriana. We discussed many times. Sustainable finance could not be just about sustainable products. Could be a different kind of science. Should be a different kind of science of finance. But anyway, even if we have a holistic approach, it doesn't mean that we don't try to have good sustainable product. And so we have, for instance, in the try to introducing an environmental covenant to our loans, to who ask to our loans, in order that if they are very committed with the social, they have to be committed also with some environmental goals. Or we have dedicated bonds So we look for financial provision, asking money to the savers with specific goal. And then we are supporting, we are quite convinced about that. We are supporting the movement of the youth, like Friday for Future or Extinction Rebellion, because we think that we really need a cultural change. And we think that the way the finance will become more sustainable will be by the driving force of the customers or the client or the people, the citizen, that become more and more engaged in these kind of issues, because we cannot wait that the politics or the institution by themselves will make the real shift. And I'm concluding saying, on our experience, reputational issues are very important. And we think that with digital finance that is becoming more and more the environment where everybody has to work, reputational issues can be a very good alliate, you can say, a good alliance for changing the finance, because the youth, the new generation, they are very used to digital and they want to achieve environmental goal. They will change the bank like this if they don't like the bank from the reputational point of view. I really hope it will happen. And so I think this is probably the reason why even the big mainstream bank nowadays are talking about green finance, because they are aware that they can lose customers if they don't do. And so I hope these reputational issues will become more and more, let's say, professional, looking to figures, data, and how the banks are managed. Thank you.
Thank you, Ugo. Being professional, as Ugo has shown, means looking, for example, at the impact intensity. No? What is the intensity of your environmental and social impact per euro of loan of your portfolio? No? This makes a difference between an organization which 100% committed and another which has, let's say, 10% green and 90% doing the opposite. So that's a very good indicator that we should look at. Now we are a bit late, but we still keep the question time. Okay, then we can catch up a little bit later. So question from the floor, and of course we'll have also a second round where you can make other questions to the other speaker. Go, please. Is there a mic? Oh, Tommaso, we can take other 5 minutes. Yeah.
Also, you can write your questions on the cards.
Good.
And so they will be handed to them, and we will discuss also in the next session. So if there are any questions left, so you can.
Yeah, just some now, and then you also write.
Also, the next session
we go on. Yeah.
Will be in room A. Okay.
Okay. We have to move. Okay.
Yeah, you have to move in room A.
That's fine.
Here there will be communication.
Okay.
Communication.
Good.
Okay.
So just one, two question now for the speakers. There was a hands there.
The same question there. So, yeah.
Go.
Okay, thank you very much. I just have a question about going for loans to fund the climate investment. I'm wondering who should take the loans and who should pay? Should it be the public agencies or private organizations that should go and take the loans from the banks, or how should the loan system work?
Okay. If there is just another, yes, Tommaso. I don't know.
I get to shout if you like. Can you hear me? Yes.
Yes.
Okay. So my question is, banking traditionally made a profit, and the profit was then used. I'll stop shouting if it's working. So banking traditionally made money by growth. So what if it's degrowth? So I'm here with Bristol Pound. We start to look at non-monetary economies and degrowth. How is that financed?
Okay. Again, so fine. Okay, we'll just keep it 2, and then we keep the other ones in the next section. Otherwise, now we are subtracting time to the break, not to the.
Yes. Well, the loan so far we are the way we look for the loans is simply that we look first at the organization. Yeah? So everybody can come and ask a loan, but we make an evaluation of primarily of the company who is asking for the loan. So we make a social environmental evaluation of the company or whatever it is, if it is a cooperative or NGO. And we have developed another tool, which is really the evaluation of the company who is asking the loans. This is a quite powerful thing because we also work on reputational issues. So we realize if the people are doing greenwashing or social washing, or they're really trying to do their best. Of course, there is always, and Leonardo knows very well, some kind of ethical dilemma. It's impossible to finance just the perfect company in the world. You will finance 3, okay? Nowadays, maybe 10, but not so many. You cannot have a portfolio of all perfect institutions. So the ethical dilemma is to understand if the company you are financing are moving towards sustainability or not. Huh? So sometimes you find very good in social issues, but not in environmental, or the opposite, and so on. So we look at the company they propose us a loan. This has another effect that I don't say before, that banking is also about information, okay? So all the adverse risk that you have by making loans is because of lack of information. If you have more information on a company, because you know also non-financial issues, you have lower risk. More information, less risk. This is a very simple, plain rules. And so it was not told, but what you have when you finance with attention on sustainability, you have less, at the end of the day, you have less risk, which is in finance is like having more profit. Huh? So it's probably you don't have the incredible results. The results are not so going so high, but because you don't have so much risk, at the end of the day, Adriana showed you the profitability of the banks is good. And my explanation is because on the risk side, you work better than the other banks. So this is then of course we can see the government could do a lot. Now in the US, I was now in the US. In the US, they are starting to finance equity capital to the community development banks, sustain them very much. Well, this is a typical US things that the government put equity and not just grants to the financial system. But for instance, these are things that I have never seen in Europe, which is quite interesting. Prego, Adriana. On the second one.
Yes, it is a good question, and I cannot answer it for the whole group of values-based banks. We need to look at it regionally. So if you are operating in a country like Nepal, you're not thinking in the terms of degrowth as such. You still have, let's think about that donut circle. You may still argue that you have some space to move the social floor and operate within the planetary ecological ceilings. But I do have an example of a member bank who is really much trying to evolve its business model to account for these requirements. And that's the model I showed you from DLS Bank. And what they are doing is they're looking at it in a number of ways. So on the one hand, as a business, they are estimating the probability of default in bringing in data from climate risk to estimate new probabilities of default of clients, which basically when it means to actually providing a loan, you can differentiate the interest rate that you charge to each client because each of them have a different probability of default based on their exposure to climate risks. That allows them to work within the current group of clients to actually create differentiation within and operate in that margin and create different opportunities for the business, because after all, they are businesses. But more importantly, they are also diversifying. And they are choosing, and they recognize, and they're asking the question, are we only able to survive if we grow? And the answer to the question is no. We have to stop, because we're so attractive, we're getting a lot of people wanting to become our clients, but we cannot keep this up. We have to think differently. We have to change our paradigm. So all those exercises that you thought about, the becoming a consultant, the developing of that model that allowed for each client to establish whether they were within or outside the 1.5 degree trajectory, whether they could do this probability of default calculation per client and adjust the cost of interest rates. All of that is geared towards answering the question, how do we avoid this notion that we can only grow to be viable? And these are some of their answers. And that's part of the response. I think it's a very valuable question to ask, and you have to try out. Maybe it doesn't work, but you keep trying. And that's the example of these banks. They keep trying when they find the question they know they need to find an answer for, and slowly try to convince the regulators that what they're doing is acceptable. So they have to engage with regulators, and they have to engage with clients and bring them along. It's a really holistic approach. I hope it provides you some guidance.
Thank you. Thank you, Adriana. So we stop here. Let's take for the beginning of the next. Okay. So we thank you, and we continue. See you at the beginning of the next section.